Hello. Oil lost over $5 per barrel this week, whilst gas and electricity prices were mixed. Near-term contracts rose and longer-dated contracts fell. So let's take a look at the week's action in some more detail. Despite a bullish start on Monday, Brent fell sharply in the afternoon, following signals of oversupply in the US market and concerns regarding economic growth. As a result, Brent closed the session nearly $0.50 per barrel lower day on day. The bears were firmly in charge on Tuesday. Continued pressure from oversupply and a lack of economic growth directed prices lower. Despite sharp losses on Tuesday, Wednesday's session was flat. The weekly EIA report showed a reduction in stocks of 500,000 barrels, although the US released data suggesting there is a strong demand for refined products, which countered the bearish news. Contracts then tumbled once again on Thursday, losing $2.3 per barrel day on day. Prices fell as the US Federal Reserve raised its benchmark interest rates, which shook the stock markets. Last night, Brent closed at $55.36 per barrel, the lowest level seen in over a year, and down $5.3 per barrel compared to last Friday. The system was well supplied throughout Monday's session. However, gas prices took their direction from the initial bull run seen in oil. Whilst oil prices managed to shake off the intraday gains, gas did not, and all contracts closed at a premium day on day. All contracts then eased on Tuesday. The system was comfortable thanks to healthy imports and an increase in wind generation, which reduces the reliance on gas generation. Weather forecasts also suggested temperatures would be higher than expected for this time of year. Near-term contracts lost around 2p per therm day on day. Most of Tuesday's losses were reversed on Wednesday as demand rose, and this was despite the system remaining well supplied throughout the day. Thursday's session was mixed. Near-term prices rose as the system was pushed into a short position, whilst longer-dated contracts took their downward direction from weak oil and carbon prices. Last night, contracts out to April 20 all posted weekly gains, whilst contracts beyond April 20 lost between 0.4 and 0.8 pence per therm. Prompt power contracts were pressured lower on Monday as wind generation was forecast to reach 11 gigawatt. However, longer dated contracts all took upward direction from gas. All contracts then softened on Tuesday, with the biggest movers being the near-term contracts. Q1 2019 lost £1.4 per megawatt hour day on day. Contracts reversed Tuesday's gains on Wednesday in line with their gas counterparts. Similar to gas prices were mixed on Thursday. All near-term contracts closed last night higher than last Friday, whilst contracts post-April 20 closed lower. You can download the full version of this report from our website. From all of us at Jutton Associates, we wish you a very Merry Christmas and a Happy New Year, and we'll see you in 2019.